How are all my trading warrior brothers and sisters today? How's everyone doing? Welcome investing.com viewers. How are you? You know, being on live streamed on investing.com must be lucky for me because 2 weeks ago we were up here talking about topping action and the potential for a break. I had a 69.20 target. We got to 880. It was way for lesser degree. I had confluence with it. On the moving average, the 50 came in right there. And then last Thursday, we were here. And I said, you know, don't chase, don't panic. There could be a nice bear market rally. Bear market rallies, we've been talking about it all week. They're dramatic, vicious, sharp, but not long lasting. So far in the NASDAQ, we're having trouble at the 50% level, coming off after this huge day that probably, you know, caused a lot of pain for the shorts. Is it over from here? Could be. I still suspect there might be one more push to 61.8. And the NASDAQ comes in around 7,400. Something else, investing.com, people probably have more experience with options. And I was also thinking about the fact that a lot of people were looking for a crash in October, and they probably didn't think this was enough. So they were buying puts, a lot of put buying. The regular options expire the third Friday, that's tomorrow. So as you could see, if people didn't bank it and they bought their puts right, put premium is going back to the bookie, back to the house, back to the writer. So I don't expect this rally to follow through much through, you know, tomorrow, Monday, Tuesday, if we get one more push up. So thank you for being my lucky charm, investing.com, for a couple of turns that were called here on NASDAQ. Appreciate it. The other topic a lot of people are talking about is, you know, we had that big move in the gold. Our company was on it. I know in Face, we talked about the long side. Steve Volge was long and patient in this range here. So still looks like it's not done, but we're approaching some equality here off of this from 1160. This was 55, 55, 1235. And on the 1 hour, I thought we might have a 3 drive formation. Here's 1, here's 2, and maybe we get that up towards a 1235 level or so. There's nothing bearish about this that I can see. The dollar's been pretty strong. In fact, we had a false breakdown in the dollar, and you know, something that those turn out to be excellent trades. So everyone thought that under 95 we'd have a breakdown. So intraday we took out 95 but closed back above it. And the dollar has had a good rally here. We're at 61.8, between 61.8 and 78.6 of this decline here. And you know, a lot of people were anticipating a breakdown under 95 that would take you to 93.80 to 92.90. And if the bears are really going to defend this, they better get to work, start taking us back under that pivot at 95.5, which you can see came into play over and over and over again. This 95.5 level here. So otherwise, I think the potential of a move, I know I have too many fibs there, but a move back over this high that we put in place last week would imply a test of the highs up near 97 or better. So we're at a pretty critical junction here in the dollar. And if we're going to defend, if the bears are going to defend a bearish position, they have to go to work and start pressuring this market. Your first sign that the dollar may be terminating this bounce would be closes back under 95.5. Everyone with me? How you doing, Kenneth? Dorit? How are you? Okay, so that's mainly what I'm looking at. I did want to talk about the oil, okay, and just to show you some of the great calls that happen here. You know, FACE is just the tip of the iceberg, okay, because we're here for an hour providing analysis from the team. And then after that, you know, the whole team goes into the private chat room. And I just wanted to show you, as a subscriber, you have the dashboard, but I just want to see, it's probably, I would guess Steve booked it yesterday. Yeah, there it is. Okay, so Steve used the Saudi news, you know, everyone, you know, they started, there was a lot of blunderbuss and they were going to, you know, accept payment outside of dollars. They put a chokehold on us. That's before they started playing kissy face again over a murder. And he used this to sell the market up there near 72 and booked it here for 2.38. And here was a loss by Blake, but look at how small that is. So, and you know, you would not have had to been in front of your desktop because we push alerts. We have mobile apps. You could have it on your tablet, but what a great trade. So all the, you know, it's another one of those people who buy headlines today sell newspapers tomorrow. So Steve faded that news. Nice trade. Steve closed it at 69.99. So that was a big trade short from here, right? And
Actually,
got out here.
actually, I'm still holding on my personal account 1/3 of the trade.
Okay. Okay.
I'll of course inform people in the chat room as I usually do when I actually decide to book. I had, I took profits initially at the first dip that we had below 71. I took the 1/3 of my profits. Then at 70, which was my pattern play target, I took the second third, and I'm holding the last third. It looks good, so I'm gonna wait to see how we're gonna close the day. I might book it at the end of the day, or I might even keep it for longer. Why not let it run since it's on its way, right?
Yeah, definitely. No divergence showing up here on the 1 hour chart, Steve. I'd probably have to go to the 5-minute chart to try and find a reason to buy it. And even that, it's looking pretty ugly here. You would think that if anything, what we can do, get a rally back to the breakdown. That's, it won't, I'm interested in the long side of it here. Have you changed your mind?
Eventually, I think that crude is headed higher. So in my mind, that's that's more or less a given. But the momentum that we still have to the downside clearly shows that we're not there yet. We're not at that juncture. And initially I thought that the move lower might have been softer, but when I actually saw that 2-day price action that we got on the 10th and 11th of October, 10th and 11th of October, and
Yeah.
I saw that consolidation that you have up there. That's when I decided to short it, because it was obvious from the previous price action and the current price action at the time that the move lower was should have at least one more leg to offer, and that price action was textbook consolidation. So that's when I decided that I want to participate more to the downside before I actually start looking for opportunities to buy the black gold, as we call it.
It looks like we're playing around the 78.6 level, a little bit underneath it here, of this move, this last rally.
Yeah, and so, on a daily chart, actually, we've cleared some major. With 70 on the daily chart, we've cleared a major horizontal area of support, and the next serious area of support is the 200 daily moving average, which currently passes from 67.35 roughly. So, there's a decent chance that we're going to make it
Right here.
to that. Yeah.
Okay.
Yeah.
You want to take over the screen?
Yeah, absolutely. And, today we have the pleasure of, first of all, let me say that Blake is not going to be with us just for today because, he had something to attend to. I'm not going to be here tomorrow for the same reason, but Blake is going to be here tomorrow. But we have with us Paulie. For those of you that are ForexAnalytix members, you know that Paulie has a webinar prior to this one, but that's only for ForexAnalytix members. So Paulie is with us. He's going to be joining us, on occasion. So people that are not members can also see his work. And, Paulie has a short-term view in the market, but he's, one of the best in what he does. And, I would want us, first of all, since Blake isn't here and we have the extra time, in essence, I would want us to have Paulie to...
Greg is here as well, Steve.
I know. Greg will be with us, so I want to first give the screen to Paulie for a little bit to give us, some samples of, first of all, what he feels good about, and then I can have a look at a few charts, and then Greg is also going to be with us, so it's going to be, a full session for sure. So Paulie, I'm passing you the screen, mate. There you go. Can you hear us, by the way? Paulie, you seem to be unmuted, but we can't hear you.
I don't have audio, he's saying.
Yeah. Weird.
Okay. Okay. Why don't you relog? I'm going to take the screen, and why don't you just log back in and check that the audio source is, correctly selected, and I can pass you the screen then. You were muted. Okay. You don't seem muted from here, and we still can't hear you.
How do you like live television, Steve?
Okay, I'm taking the screen, and Paul can relog, and then we can.
It's like broadcast FX.
Yeah. You know how it is. It is what it is. So this is what I was showing, Dale. I think on the speaking of crude, I think on the horizontal, we've passed this horizontal support area in crude, and there's a decent chance that we can even make it down to 66.20. But it's the 200 daily moving average first. So let's see what happens from there. Now, having talked about that, you already said. First of all, I shorted yesterday. People in the chat room already know it. I shorted yesterday 1/3 of a position at 28.14. I lost.
You think we could? You'll scale in halfway back, 61.8 back.
Exactly.
We have kind of like the same plan, different indices. So,
exactly.
Okay, got it.
So my plan here was the following. I do think that there is a very high. This is the 4-hour chart. I do think that there is a very high likelihood that we're going to see at least one more leg higher. But since the move lower was impulsive, I don't want to be out of the market. If you remember, I was persistent. I was short here from almost the high. I booked 6.3% profits. That was, the trade that made my month immediately. And, I got rid of my position completely. And now that we jumped at 28.15, I lost the initial chance to get short. But when we revisited that level, I actually shorted 28.14 was my actual entry. That was 1/3 of a position. And I'm keeping 2 more bullets. I want to be short another 1/3 of a position for the time being. I've switched a little bit my orders. I have another order at 28.45, and I have another order at 28.60. But depends on what kind of price action we have. I wouldn't rule out that I might, eventually, change those. But one thing is for sure. Yes, I do believe that there is a good chance for a stronger rebound higher. But I also would like to keep scaling in because I believe that as long as we remain below 28.90, there are very, very high chances that we're going to see at the very least a retest of this 27.40 area, if not a push to new lows. So I would feel very comfortable eventually building a full position with a cost average, let's say at around 28.40, because I consider it a given that, I mean, personally, from a personal perspective, right? I'm speaking of my own thoughts. I mean, I'm not giving advice to anybody what to do, but my own thoughts is that we're going to see lower levels than that, and I will be able to book another short in profit. So that's how I view.
How about, do you ever press on the way down? You scale in on the way up. Do you ever press on the way down?
Oh yeah,
once
on
it starts
occasion.
working,
Yeah. On occasion, I do that, and on occasion I do that. I mean,
it's like pedal to the metal. You've taken the heat, and really now you're just getting the signal because it's doing something wrong. You press it.
It's extremely frequent for me to both scale in and scale out of my trades.
Yeah.
That is why I also choose to put a rather few patterns in play, because patterns in play are also mostly educational in nature, and they show our interpretation of the markets. They've been performing amazingly, there's no question about it, but they cannot simulate a real trading environment because, for example, people like Amanda, people like I, we don't usually establish a full position at a certain level and then just book profits at the whole position at another level. For example, in crude, it happened that I established a full position without scaling in, but usually I scale in. But for example, I have already scaled out 2/3 of my position at different levels, and I'm going to probably scale out the last third of my position at a third level. You know what I mean? So that's why we also use the chat room. That's why we're so many traders there. We share ideas. We can we can explain in more detail what we're thinking, why we're doing what we're doing, and what's the whole thought process behind it. And of course, we have the it's absolutely fun. On occasion when the market's slow, we're talking about other things. We might have some fun. People get to know each other. People
it's fun being hot in the market too, isn't it?
Yeah, there's no doubt.
I know. I'm having fun lately. It's not as much fun when things aren't working. But you just have to be ready to say next all the time. Like, I don't know about you. I think, I still get elated when it works, Steve, but, I think the place to be is eventually you want to get to every trade is just another one.
By the way, let me make Paul. Paul, I think you entered.
Got him.
Yeah, but he entered through a different account. So let me see if I can unmute you. I did promote you though. So let me see if I can unmute you from here. Paul, can you hear us now?
Shows him unmuted. There's two of them in here. Presenter, organizer, producer.
Yeah,
casting agent, screenplay writer.
Hey, Dale.
Yeah, we hear you now, buddy.
I think
we can hear you.
I'm trying to find the says share screen. There was a share screen button. I'm trying to.
We can see your screen. We can see your screen, mate. I think you're actually logged in twice in GoToWebinar at the moment. That's probably the issue. But regardless, we can currently see your screen. I can tell you that much.
Welcome, Paulie.
Can you take over the screen and I'll try and find that button again?
No, we can see your screen.
Can you take over? Because I can't find but this isn't the screen I'm going to be on. I'm trying to switch over to the other screen.
Okay. Yeah. Okay, absolutely. So let me momentarily give it to Dale, and I'm going to give it back to you.
Okay, I'm trying to find the, hang on one moment. Let's see if I can find it.
There it is. I passed it again.
Let's see.
While we're doing that, maybe it's a good time for me to go through a couple of things.
Yes, Stelio.
Is that
it's
okay?
a very good idea. It's a very good idea. Until he starts his screens. Okay, we can see
now I think we're going.
Okay. So
there, I think.
Okay, so let me.
Okay, here we go.
Yeah,
Here we are.
yeah. We can see the correct screen. Yeah, absolutely.
Okay, you were mentioning about the crude, and we were talking about the crude on Monday. One of the things I was noting here, and in regards also to the dollar, one of the things I have not been a dollar bull, and one of the reasons I was referencing, for those who've been following on the webinar, I kept making the point that, hey, the dollar should be a lot higher. One of the things that we saw when the equity sell-off back on Thursday was the dollar was just treading water. So we're looking for a lower dollar, and we got just that. We got the lower dollar. But when we started out the week, we thought, okay, we can make it down here towards 94.68, maybe even lower. But one of the things that I covered on Monday, for those on the webinar, I said, hey, look, we covered a story from Reuters from James McGeever, and it was on the dollar, and he was saying the tale of two different dollars, because the dollar already gained over 4% against emerging market currencies, but against the developed currencies, it had not really moved at all. And it was like a head scratcher. And so one of the things that pointed out, and it was from Contact or whatever reference they had, they referenced about oil, and they said one of the things about that the dollar's having a tough time and why it hasn't gained against developed currencies, even though I think when they did the CFTC data, there's $29 billion worth of longs in the market, was they were referencing oil. And they said, it's looking back at the twin deficits here in the US, although oil is less of a component nowadays, but it still was referencing that. So I was telling the guys and gals on the webinar, I said, hey, look, if we lose $71, that's going to be a trigger for the dollar to go and move higher. And I said, and I even posted like a little story in the chat room and said, it's going to take the chains off the dollar. So we started seeing crude start to break yesterday. And I said, look, what I want to see is to be a believer. I'm not a doubter of the dollar now, but to be a believer would be 2 consecutive days below $71. So we did break below that level. We got our first day close at below $71. Now Dale was saying, hey, I'm considering maybe even being a buyer down in here. If we look at the very last low, we still have some more room to go here on the crude oil. And what I was looking at when you are referencing crude, and I was saying that on Monday, is I haven't looked at crude in a long time. But moving here, I was looking at this level here, right here, you can see. And if we break, I was looking for a move down here to $64. It's not so much I'm interested in crude because I haven't traded crude in a long time. But I think that what you have to be cognizant of is that we're going to get further momentum in crude. We're finally starting to roll over, and this is my concern with the dollar, and I'm looking here at euro. One of the things that we had looked at with the euro when we were able to defend this very key area, which is 1538 on the daily. You can see how huge 1538's been as far as the daily, how that's been a major key. We've been using that as a barometer. And when we got above it, it looked like we might make it up to possibly 1624, which is a 50% of this move, and we started to lose it again. And so yesterday when we lost it, the market started winding down, and I'd mentioned in the chat room that we do have a target level down here at 1487, and we came down here. But my concern is now with the dollar, if crude does continue to pare back, that's really going to open the room for this dollar to move higher. And I think it would take the chains off of the dollar. And so I think you have to be cognizant of that. And with euro now having lost 1536, one of the things we talked about this morning in the webinar, we said, hey, look, we did get a rally, and we were looking at this target yesterday in the chat room when we had our support yesterday at 1503. I said, look, this euro doesn't look good, but the target down here is now 1487. Really, I was mentioning to people is that any moves up to 1536, they're going to use that as shorting opportunities from just a technical standpoint, because now the euro has lost 1536 a second time, and the market's going to be a doubter. So I said this is really nothing more than probably a short covering rally, just a little bit overdone. So now here we are starting to slide. What I told people was keep your eyes on crude oil. If we continue to slide here in the crude oil, it's really going to open the door now for the dollar to move higher. And I've not been a believer in the dollar, but I'm not a doubter of the dollar because the dollar simply doesn't want to go down. We were looking for a move lower since Thursday. We got that move lower, but I tell you what, I'm disappointed that we did move even lower.
Yeah,
I tell people
very choppy.
hey, don't
Very
be
choppy
short
price action.
these FOMC minutes because they should come out hawkish. even though now there's a little bit of concerns as to what may happen going forward, and we continue to move higher. And we said, hey, look, 95.55 was going to be our resistance. We thought it could stretch as high as 77. And where we came up here was right here. You see these touches, I always go with the bodies. And that's where the market did run out of gas here, okay? But honestly, I thought what we would do is we'd open up, we'd go higher into the FOMC minutes, and we'd be able to pair back. But the dollar continued to move higher, and to me, what I was looking at was this crude oil, and this crude oil looks like it's starting to gain some momentum now as we broke $71. And just looking at technicals, I've got a target down here really towards $64 here. And really, we don't see any real support here for crude until we get down here. It's because Dale was talking about maybe intraday to 68.10. So I think you have to be careful with this dollar. I think that we can finally start to move higher in light of where interest rates are. Here with the bonds starting to turn lower again. The only thing is I'm jumping all over the place is that I'm surprised how well gold's held up. Gold's held up really well. If the dollar does push higher, we do have 12.1670 as a 38% of this run from essentially 1184 up here to 1237. But gold's held up very well in light of this. I don't know if you have any comments now in regards to that, but that's the one thing, and I haven't looked at crude in a long time, but this is the one thing I'm really have my eyes. I think whether you're trading the dollar CAD or you're trading the dollar index or you're trading euro, you really want to keep your peepers on this crude oil, because if we just now broke it yesterday. If we continue to get some momentum, further momentum, that's really going to open the door for this dollar to move higher. And as we go into Friday, and we've seen this on Fridays, people just don't simply want to stand in the way. And I think that you could end up seeing this dollar push further if we see crude continue to work low. And it certainly looks like we've broken some good support here in crude oil.
Ole, you are an excellent short-term trader. What would be your favorite setup at the moment, or setup that is about to trigger or that just triggered? I mean, what is your favorite trade out there if we're talking about today or
from a risk reward, and I have not been a fan of the dollar at all. You got to say the dollar index right now. Matter of fact, one of the things we talked about this morning, the webinar, we were right there at 95.52 at the time, and I told them this is support here. And we did dip with just a couple of ticks lower, but I said this is support because when we were doing the webinar ahead of FOMC, we had mentioned that 95.77 area right in here, and I was looking at the body touches here. I said, well, that's really too far. That's really a stretch. Well, it did get there, but I said, where does the rubber meet the road? And I go, that's going to come in around 95.55. So, and that's where intraday after the FOMC minutes, we were actually struggling, and then we kept moving. We moved higher. Well, you can see right here, 95.52. That's where they came down. They touched it. If you were looking from just a plain old technical standpoint, you got to look at crude. The dollar index would probably be the best way to go. The euro did come down to that 1487. We had support yesterday at 1503 for the bias chart, but when the euro was acting pretty sickly, I said, hey, the target's going to be 1487 at this point, but it's going to be tough for the euro now to get above 1536. We'd have to get above 1536 on a daily close, and that won't even turn it bullish. All that will do is stop the bleeding. So my thought would be it would be our support right now for the cash dollar index, if we were to say a pullback, is 95.38. But really, this is support. And if someone was looking at, okay, from a risk reward standpoint, it'd be buy the dollar index going into the close of Friday, and keep this on your screen all day long, because I tell you what,
the cable also looks
erosion in crude oil, it'll move the dollar higher, I believe.
The cable also looks somewhat vulnerable, right? I mean, 133 has been a major hurdle that it doesn't seem to be able to clear. And I don't know, the more we consolidate here, I think the higher the chances that the bearish trend will re-emerge. I don't know what you think about the cable.
The cable, this 3056, have it in crimson and have that as a pivot. You can see how important 3056 has been to change or, further push the momentum of this market. To me, I think the cable's actually held up very well against the dollar. It's pulling back, but I tell you what, I don't see why it wouldn't pull back because of the strength that we have in the dollar. So I don't think it's as much of a, although there's some concerns with cable from headline news and you can't do anything about that, but we've got support, or we actually have a trigger right here for this morning coming in. There's your support coming in. I think we had it at 3088. I think that if you get past 3088, it'll turn the market where they're just going to gun the stops and no one's going to look to cover until we get just past 3050, and that would be around 3046. But once again, your eye has to be on this cash dollar index. I really believe so. And with crude oil, and it's all about that. And I tell you what, gold's holding up real well, but we do have resistance today at 1229. That's our resistance. The only thing that I think will push gold back down, obviously, if the dollar breaks out. And I think there are a lot of doubters in the dollar index. I've been one of them, and it's played out relatively well. But right now, if crude starts getting some momentum to the downside, if you don't want to be a buyer of the dollar, don't be a buyer of the dollar, but don't get in the way of the dollar if crude continues to move lower and garner some momentum. That would be the one takeaway that I would want to offer.
Something important in the markets that's also happening today, I don't know how many people have noticed, I'm sure you've already noticed, Paulie, is that the USD Chinese yuan is actually testing the highs that we got in August. And it seems to be threatening to finally break out of this recent consolidation and perhaps take out the 7 level. And I'm pretty sure that that's going to shake the market quite a lot when and if it happens. But it looks to me, from a technical perspective at least, it looks to me like a very, very likely event. We were talking about that several days ago, that this looks like a bullish consolidation. And we might even get some extra risk off if and when that happens, because we might get more statements from the part of the US, especially Trump, how much outspoken he is, more accusations about currency manipulation, etc., etc. So I don't know, that might even contribute to seeing another leg lower in stocks.
It might. One of the things that we looked at, this is very key here. I pointed this out on the way up, and I don't even trade the equities. Actually, I did trade it the last couple of days, but I shared this actually in the chart room too, this 2789, because people were actually trying to take pot shots out against it. And I said, hey, look at this 2789. The key is going to be where we close. I go, because they were trying to take pot shots on the short side. And I said, hey, look, it's probably going to squeeze. And at the time, it was like 2788 or something. I go, hey, look, it'll probably even get up to 94. We did continue to keep squeezing. Actually, we finished the day at the time very strong. But the key was going to be this. This is on a daily. So if they were going to defend this, this is what I said. Hey, look, because at the time we're all looking at the dollar yen and say, hey, look, if we lose 2789, and we did not. We kept squeezing and squeezing and squeezing on the way up, all the way up to all the way in the closing bell. We were up there at 28.19. So they used this as a pivot because it was right there on the daily. You could see that, and I'd mentioned that. Well, where the heck do you think they went to yesterday? 27.89. And when they tested, it came right back up. I thought on the FOMC minutes they might come up to 28.32, a possibility. 28.29, I think it is a 50% of this entire move. But this is a good strong close here. I don't know if the market is going to try and eventually go down. I think that eventually we will do, but what happens in the next day or two, that I'm not sure. My only concern is,
I think a high chance for more upside, as you mentioned, because that was a strong close. But personally, I believe this eventual rebound is going to end up failing, at least for one more leg of weakness. Now, I don't know if that's going to be just retesting or coming near the lows once again, or perhaps even taking out the lows, going to new lows before seeing a stronger reaction. But I think that the closer we get to like 28.50, 28.60, the reward to risk ratio is going to be extremely appealing, for resorting the market. That's what I think about it.
Well, my a line in the sand is 28.45 right here. You can see that right here on the, let me see if I can put that. I generally only look at 2-hour charts, but you can see here, and you can see the importance of 28.19. I use that as a target, or I was mentioning, I didn't even think it would make it there, but I actually got short into the close the day before, not yesterday, but the day before, as we were making that run up in here. I'd already got shorted 07 and added, and I was able to cover one of them in Asia and the other one as we dropped down. I didn't even think we'd make it all the way back down to 89, at least not that quickly. But my line in the sand is this 28.45 right here. What I'm thinking is the get out of jail card for the bulls, once again, that may be able to levitate this market a little bit higher will be if we can get crude oil to come down here and make a move towards 68 or a little bit lower. That may allow give the excuse for the S&Ps to move higher, but I'm in agreement with you. I think we do eventually challenge those lows, but if crude continues to move lower, that may delay that before we go.
Perfect. Thank you very much.
In the meantime, I think that with the lower crude oil prices, it'll give an excuse for the S&Ps to move higher.
Thank you very much for being with us, Paul, and for everybody. If you are a Forex member and you can start your Forex trial for just $1, then you'll have 10 days of full access. You will also have access to Paul's webinar. It's every day, 1 hour and 15 minutes before phase starts. And Paul is always a person that gives you extremely good levels for the day that's ahead. He also builds the bias chart, which is your guide for the rest of the day. Thank you for being with us, Paulie. Grega, I see, has just joined, so I'm looking forward to seeing what Grega has to say as well. Grega, how have you been, my friend?
Hey, man, I'm fine, thank you. I was just listening. So, I agree with Paulie about this resistance level that he highlighted for the S&P.
Personally, Grega, I started scaling in the S&P from 28.14. But to be honest, even if I see a retest of the 61.8 at 28.52, I'm totally fine with that as well. I mean, I'm willing to scale even to higher levels because I really believe that we're going to see at least a retest of the lows at the worst case scenario.
Yes, I mean, or we at least stay sideways. I definitely do not expect either any retest of the highs, since I think that we are here in this corrective phase. So I'm looking for a wave 4. As you know, I'm looking for a flat formation. So this was wave A, and this was a 3-wave move higher for a wave B. So I'm looking for a 5-wave drop down for a wave C. Of course, this could also result into a triangle if this decline from the high would be only in 3 waves. So for the near term, I think that after all, we are going to see another leg down. And based on the recent price action, I think that we are already facing some interesting resistance levels here. So this 61.8% is probably my key level. As Paul said, 28.45 should be very important. And on a lower time frame chart, 1 hour, you can see that I'm looking for these few projections right there in this zone. So it's actually my few projections suggest that we will see 28.25 to 28.50 area as tested. So rather than looking for precise number, I want to look at the zone from where I would expect a reversal down.
I'm in agreement with you. I think that the price action that we're currently seeing seems in the very, very short term corrective. So I also believe that there is a high chance that we're going to see one more push higher. So that's why I'm only short 1/3 of a position, and I'm really hoping for another rebound to scale in and get a bigger exposure being short again.
Yes, of course. I'm also considering shorts as well for myself based on this clear pattern. But for me, it's just not good risk reward here, at least not yet, because I'm 140 points away from invalidation level. But if this is going to be only wave C drop, then of course this will not be such a good risk reward.
I'm 100% in agreement with you. That's why I'm short just 1/3 of a position still, and that's why I haven't made a pattern in play. I will if we see higher levels. You know, I'm really hoping for some kind of a much bigger rebound. I mean, ideally for me, I would even want to see a squeeze towards, I know that it's not easy for that to happen, but towards the horizontal support resistance area at 28.65. That would be amazing for me, because in my opinion, if we get squeezed up there, there's going to be a lot of bulls that are going to be dismissing the previous drop lower as you know, a one-off thing that the market has now forgotten about, and the risk-reward ratio is going to be simply amazing. So you know, I'm going to be taking that opportunity. I'm going to be grabbing it, you know, both hands.
Yes, and actually, here's another thing that we should pay attention on to confirm with an intermarket analysis if maybe stocks are really headed lower. So as you know, I have been looking at 10-year US notes. I have been warning about that rebound because of 5 waves drop down from a triangle in the 4th wave. So from an Elliott wave perspective, when a 5-wave move is completed, you would expect at least 3-wave corrective rally.
ABC, yeah.
Probably back into the area of a formal wave 4. So in such case, it means we may see more upside. And if that's the case, then stocks may actually turn to the downside, because if you take a look, when we were turning down on 10-year US note here for a wave B, which for now is still in 3 waves, at the same time, that's actually timing when S&P 500 recovered. So with that being said, I think that this new leg, third leg rise, may actually begin very soon, which of course, based on these correlations, you would probably expect that stocks will continue to the downside. So to make sure if either we are already turning down from here on the S&P 500, maybe we may watch for some early evidences of a bounce here on the 10-year US notes. Also, what I see is potential head and shoulders bottom here, left shoulder, head, and a right shoulder. So again, this could produce a very nice.
Could prove an inverted head and shoulders formation. Yes, that is very correct. Before, I know that Stelios has to go in a few minutes, so let's pause. Please, let's pause for 2 minutes, because he wanted to give us some macro information. Stelio, do you want to tell us what you had in mind? I just didn't want to interrupt Paulie when we got him.
Sure. No problem. I mean, it's nothing major. Just a couple of notes on what happened yesterday. So we had, we talked about the FOMC minutes yesterday, which were actually unsurprising. There were 2 little things that were kind of interesting. One, on the dovish side, that some members thought that there is a risk with the appreciating dollar towards emerging markets. So that was one thing, but the main change was that they apparently a number of officials saw a need to raise rates perhaps above what they call the long run level, which is broadly known to known to be around 3%. So that was the hawkish part that the market saw, and drove the dollar a little bit higher on the back of that. So that was the one thing. The other thing was something we should have talked about yesterday, but we didn't on yesterday's webinar, was we had inflation numbers from the UK, and that disappointed. That came in at 2.4% year on year versus 2.6 previously. Now, the interesting thing is that the market remains in a quite bearish sentiment until towards sterling, and you can see this from the reaction from yesterday's numbers. I remember some months ago when inflation was 2.7% and earnings growth was 2.4%, and everybody was saying, "Oh yeah, inflation is high, but look, it's a pinch on the consumer. Inflation is running higher than the rate of average earnings." And now we have the exact opposite: 2.4% inflation, 2.7% earnings, and still it's a bad thing. So you can't have it both ways. So it just
with central banks and general government gimmicks, they always want to have it both ways. Stelio, if I may add one more thing, we had one more important thing, and many people don't notice those kind of news. we had the final number for the deficit for the fiscal year that passed in the US, which was $780 billion.
Yes.
The fun part is the following. We had a deficit of $780 billion, but during the exact same fiscal year, how much money did the US actually borrow, Stelio?
What was it, a trillion? What was it? I can't remember.
More than 1.2 trillion.
1.2 trillion, yeah.
Which means that, first of all, the real deficit is more than 1.2 trillions, and they managed to actually characterize more than 50% of what's on budget as off-budget or one-off items, which is just a joke. If any company in the world did that, they would all be in prison. All of them. I mean, the board, the CEOs, the CFOs, everybody. So the official deficit is 780 billions, but the US actually needed more than 1.2 trillions to cover the needs for the year, because, as I said, many items are off budget, and that's not even counting unfunded liabilities, contingent liabilities, etc., etc., etc. So you get what I mean.
Indeed, yes. Right. And you know, the US currently stands, what is it, over 22 trillion of debt now, and it's just going 1 trillion a year. It's scary, and this is one of the main reasons why I remain bullish in every, you know, or not every, but many dollar-denominated assets, you know, like commodities and precious metals. I think the long-term.
Eventually, gravity, as always, is going to do its work. Yes. Yes. Thank you very much, Stelio. By the way, there is a friend asking, before I pass it back to Grega, there is a friend asking, Grega, if you can please show Forex Analytics so I don't take the screen for you, because they're asking what I was mentioning about the $1. If you can show the Forex Analytics chart, you know, this is a free webinar from Forex Analytics. So, yeah, so Greg can show you the site. And yeah, mate. Okay. So yeah, if this is Forex Analytics, you know, and this is the Forex Analytics platform. You know, you can gain access to it for 10 days just for $1, so you can buy exactly the services that we offer. You can also, this is a daily webinar. It's a free daily webinar. You can participate any day you want at it. On the main page, you can just register for that webinar, because, as I said, it's daily. If you are an investing.com viewer, keep in mind that you can watch it the rest of the days. And let's also mention that, you know, you can even subsidize your Forex Analytics subscription through our cooperation with Forest Park FX. You can find that in our homepage in the reimbursement program. And in general, you can get any kind of advice or, you know, get them to help you, because they're an introductory broker, to choose the right broker for your needs. So after all that, back to you, Grega. I really want to know what else you're thinking, what else you're looking for.
So as we discussed, I'm looking definitely for the S&P 500 to turn to the downside. Now, the next market I'm also tracking is dollar CAD. I really like how dollar CAD actually came down to test this 122.924 support level back from from October 10th, and notice that also there was this trend line that was broken last week, so now it turned out to be a very good support. So I think that this can be actually a completed flat correction, which means that even if we are going to see only third leg to the upside, like a wave C, because as you know me already, I always try to focus on minimum expectations. I still think that there is a chance that market will actually move very close to these highs that we have seen in September. So actually, I'm bullish on dollar CAD, expecting more upside. Also, this whole turn from start of the month has occurred exactly from this broken trend line, very big trend line connected from 2016 highs. So definitely, I have to give it a try on the long side. So ideally, we will see even acceleration to the upside, especially if we consider that crude oil has made a 5-wave drop from the highs. So it looks like that crude oil completed this this wave 3. Okay, you can see waves 1, 2, extended wave 3, wave 4 was a triangle, and wave 5. and now we are turning to the downside. And so far, it's only one leg to the downside, but corrections are always in freeze, which means more weakness after wave B pullback. So I think that crude oil could actually continue up to 63.50, maybe even towards $60 per barrel, which at the same time, as you know, based on correlations, I think the dollar CAD could be much, much higher. So dollar CAD, I really love how it plays out at the moment. And if we see a break and a close above this wave B swing high, then this would be a confirmation actually that wave 2 was really a flat as first we said. Okay, so this one is on my radar screen. Also, the next market that I'm tracking is Aussie. Okay, now Aussie dollar. If we go to bigger time frame charts, firstly, you can see that actually we have came down from this very big upward channel. It was broken this year at the start of the year, so I'm looking for a drop below 2016 lows. Okay, so Aussie is clearly trading bearish and should continue within this bearish impulsive cycle that I'm tracking. Now, here you can see that I'm looking at a line chart rather than a candlestick chart because it provides more clarity. So the idea is that
because you only get the daily closes and not the intraday noise.
Yes, exactly. So the idea is that I want to stick with the trend. So I normally look at this line chart whenever I see some overlaps, but maybe just small overlaps on a candlestick formation. Okay, so then I switch to line chart, and if I can count very clear and still valid impulse, then I trust more on line chart because I still want to be looking into the direction of a trend. And for now, this is to the downside. So I'm expecting more weakness. And on the 4-hour chart, actually, we could still see more weakness for a wave 5 here.
Oh, by the way, I see on the right-hand side, I don't know if you were, if you had already logged in. I was speaking to Paulie, and I was telling him that, in my opinion, we're breaking out in the USD Chinese yuan market to the upside, and I expect that we might push even above 7, which might also be another catalyst for the market, for the stock markets to roll over lower. So that might also affect the risk mood.
How interesting. Well, I wanted to highlight this.
Yeah, probably you want to highlight it as a correlation with the Aussie, right?
Yes, exactly. So because I even myself had some doubt if maybe we are already pushing higher here for a wave 4 now, but then I looked at Chinese currency and see that there's more weakness ahead for this market because I noticed that market is here in a wave 4. So if this is a wave 4 and wave 5 will take us higher, I think there is a reason to stay bearish on Aussie dollar. So actually, with that being said, we also have a clear overlapping recovery on intraday chart here on Aussie. So I think that Aussie could really come under pressure. In fact, this could be some kind of a ending diagonal formation. It was retested this trend line a few times, and what I would be looking for is a break beneath 71. Okay, so if we see starting prices to accelerate to the downside and taking these levels out, then I really think
then you're expecting new lows.
Yes, exactly. So I'm definitely watching this for trade for myself as well, but want to be patient here because, as you know, there's still possible to see retest of higher prices because gold, after all, is, if I switch to gold real quick, is still some kind of a slow here. So if gold will pop up here, then maybe this can cause even more upset on Aussie as well. But we have to consider that Aussie dollar is not so strong and aggressive to the upside like gold. Okay, so if and when gold will come to the downside, I really think that Aussie dollar will
collapse. Yeah,
exactly. Especially
tell me something. It's more than obvious for the vast majority of the FX and dollar-denominated charts that you've already shown us that you're expecting, at least in the short to medium term, more dollar strength. So why don't we go straight ahead and have a look at your view in the DXY, and where do you think that we stand in the DXY itself?
The DXY is quite tricky at the moment. I don't know, it's probably because of
I know. That's why I asked you, because I'm also perplexed. I mean, the price action in the DXY, it's a little bit abysmal. I mean, it's very hard to read.
On the short term, it's not that clear, but here on the longer term, I mean, the picture is very clear to me. This was clear inputs. Okay, now either this is wave 1. Okay, let me level. Either wave 1 and you will see a wave 2. Okay, and then we will see push higher, or it can be maybe wave B, and we will see push higher only into wave C before market will maybe move to the downside. But the idea is that in both cases, this part, this square,
will be bullish. Yeah, so there will be one bullish leg at least.
The only question is if this reversal down from August high is already a completed correction, or we will see more weakness. So that's the key right now. And for now, it's still soon for me to confirm if we are going to see straight to the upside or more weakness here for this wave C drop, as you can see here. Okay.
Yeah, from a basic technical analysis perspective as well, it's very, very hard to read this kind of price action. I mean, it's very choppy.
But my primary count is still flat correction. Okay, so I will draw these lines to not confuse someone. Okay, so this was wave A, first leg of a pullback, and this was a wave B flat correction. So ideally, another leg to the downside, which will be similar to this one. Okay, but as I said, there is of course chance that market has already completed a correction down here. Okay, so the question is when one of the counts will be confirmed. I would probably look to the upside if we see a break on a daily close, maybe even on a weekly close
above 96.20.
Yes, in such case, I would really have to consider that we are headed above 97, because the reason is very simple. I don't want to miss the opportunities if the market is really going much higher based on a longer time frame charts, the dollar. Okay, so if we see starting to break 96.20, then definitely I will be looking for push to new highs. If we're starting to drop back below 95, then I really think that this wave C could come in play. And once we see a new lows, there will be, again, a lot of traders who will finally say, okay, dollar index is back in bearish mode, but that's when normally they will find themselves on the wrong side, especially because you have to consider where the money is on bigger cycles. And this, I believe, it's clearly bullish since this year, since the start of the year. So any deeper correction would be just probably even more interested for those who are considering to join this dollar trend.
The potential of a big head and shoulders formation there on the weekly, how does that look to you?
Big head and shoulders on the weekly. You mean like
there, where you're looking at, yeah.
Left shoulder, head, and right shoulder.
Yes.
I would maybe look for this if I would already have free wave structure from these January lows. But since this move is very impulsive, I'm not really sure if we are near completion.
I mean, let me simply say it like that. On the big count that you have there, what if after the wave 3 clearly impulsive move that we had higher, where you have A was actually a wave 4, that up there was a wave 5, and now we get a corrective move higher, and that's going to be the right shoulder of a big head and shoulders formation. You understand what I mean?
Yes, of course, I understand. And that would, as I said, I would look for this only if or when this recovery from the start of the year would be in 3 waves. Right? Because then that will be a 3-wave structure, and we starting to unfold to the downside. I would, from an Elliott wave perspective, I would say that this was a correction, not the start of a new uptrend. And in such case, this bearish head and shoulders pattern would likely confirm would be another confirmation, a different approach to prepare my very wave interpretation.
Okay, from a macro perspective, I have to tell you that personally, I feel stronger about your alternative interpretation on that. But as you very well said, in either case, we can see in the short to medium term more dollar strength before we make a decision of what's the case, right?
Yes, exactly.
Perfect. Coach, is your guest here?
Yes, Steve.
Okay, perfect. Thank you very much, Grega, for being with us. I want to wish everybody a very nice weekend, because I'm not going to be here tomorrow, but Blake is going to be here tomorrow. So thank you, Paulie. Thank you, Stelio. Thank you, Grega. Coach, enjoy the interview.
Okay, have a nice weekend, Steve, and thank you, Grega, for another crystallizing 15 minutes with you. The Wizard of Waves, part of our team, and Paulie Franco, one of the better short-term traders out there on the net. So you guys have gotten a pretty good view of our team. Blake wasn't here. You haven't seen Amanda or Joe, but really try and find a more powerful combination of analysts on any one site. Let me know. I'll subscribe. Frank, how are you? I see you, buddy. I want to thank you for coming in. We're going to have a discussion on gold with Frank. Frank, I'm going to make you the presenter. Let's see here. Why isn't that happening? Huh. I guess I have to take control first to give you control.
Is it Frank J?
Yeah.
Okay, let me try.
Okay.
Huh. I'm wondering if there is a limit to how many stuff we can...
He's been here for like an hour, almost.
No, I'm wondering if there is a limit to the number of staff we can have before promoting him, because I'm also not seeing the ability to promote him, but I can definitely unmute him. Let me see.
Can we? Yeah, hi, Frank.
Hey, how are you, sir?
Okay, Frank, thanks so much for joining us today. Great to meet you.
Nice to meet you.
Did you want to show your screen, or is there anything you want me to show?
Mostly just be verbal.
Okay. I know that you wanted to talk about gold. So first of all, why don't you tell us how you became a writer and had this kind of interest in...
Coach, I just gave you the screen in case you want to show like his website or something. Okay.
All right. Thank you.
Thank you.
Thank you. So tell me, how did you get started in this? What was the catalyst for you? Being suspicious of paper and looking at other alternatives, and how average people really kind of get fooled by, looking at their fiat wealth. And go ahead.
I think it's more than average people that get fooled. I think everyone gets fooled. I think professionals get fooled. I have discussions with professional traders and professional investors that often they like to talk about nominal dollar gains and nominal dollar capital gains, and they never bother to inflation adjust the things that they're talking about. And the reason I got into this topic in the first place was, it's just like many of your guests I've heard before when I've listened in on your fantastic webinars, is that 2008 really shocked a lot of people in this country. No one, I mean, not nobody, but very few people saw that it was coming. Very few people predicted it. And it was a monumental occasion, as everyone can remember. And that's really what the catalyst was into me being interested in all these things. And in reading, economic history and macroeconomic analysis, I look at gold as a completely different type of asset, if you'd like to call it an asset at all. A lot of people look at gold as if it's an investment. I don't look at it as it's an investment. I look at it as its own separate currency, or more appropriately, I look at it as if it's money. So kind of tying the whole thing together is, if you approach gold like I approach gold, in my opinion, and viewing it as money, you guys do a fantastic job with your Forex analysis of the dollar being up, the dollar being down versus other currencies. And I don't really pay attention to the day-to-day, hour-to-hour, minute-by-minute fluctuations because I'm not a trader. I don't move in and out of markets. I'm an investor. So the reason I view gold the way that I do is because gold possesses the properties necessary for money. And gold has been money for something like 50 decades now, 5,000 years. And it wasn't chosen arbitrarily. So when you compare gold to like fiat dollars, you have a lot of the same types of attributes.
You can't print gold.
Gold is genuinely scarce. So okay. it fulfilled all of the roles that you would need for a sound money. You would need something that's a medium of exchange. You need something that's portable, something that's durable, divisible, fungible. Something that's a unit account and a long-term store of value. Now, we have all of those things in the US dollar except for the long-term store of value. The problem I think we have is we're very short-term thinkers. A dollar to me or a dollar to you is not what a dollar was to my grandfather or even my father. It's a constantly changing environment. And if you paid attention to the day-to-day fluctuation, yeah, the dollar could be stronger, the dollar could be weaker. But in reality, it's a long-term downtrend. There are some estimates I've read. I've read many estimates, but it seems as though
80% from the buying power it used to have, I think, already. And
I think it's 80% just from the 70s. But if you go back a century, there's about 2 to 5 pennies worth of 1913 purchasing power left in the dollar. And that's really what this all comes down to, is because if you look at fiat currency and it's just a worthless piece of paper, it's not really a worthless piece of paper. It's a promise, and it's everything that it comes with confidence, and confidence is something that's fragile. So if you look at all the fiat currencies that have collapsed throughout history, they didn't collapse because people just suddenly woke up and said this paper isn't worth anything. It became worthless because people lost confidence in the ability to purchase things with the money.
So do people have to be conned to have confidence?
That's a good question. I have confidence in the U.S. dollar in the short term. I mean, I've worked for them. I use them. I pay my bills with them. I just look at when I measure things. This is what, to me, it's all about measurement. When I look at currencies, we talk about a new house or a new car or clothing. We measure those items in U.S. dollars. It's a natural reflex. So if I say my house costs $350,000, that gives everybody in the moment time to reflect on what that means. Now, if I told you if my house cost $350,000 and it was 1950, you're talking about a house that doesn't exist. So over long periods of time, which is what money should be, is a store of value over long periods of time, because you save money over long periods of time, then I look at gold for a much more accurate measure. So a constant analogy that I like to use is, if you're a construction worker and you go to build a house, you need tools. So let's just say you're using a measuring tape. That measuring tape has to be the same standard measuring tape every single day. That's how you measure windows. That's how you measure walls. That's how you measure lumber. You can't use a tool that changes its length and in essence its measurement every single day. That's what we do with fiat currencies. We're using something that changes in measurement every day as an accurate measure for things. So just like as an example, we talk about dollars nominally, and that's a word everybody should be familiar with. When you have a nominal $100 bill, my $100 bill and my grandfather's $100 bill is the same nominal value, $100. But what it purchases is completely different. So if you took a $100 bill today, I could buy $100 worth of goods and services. That $100 bill in 1955 bought $930 worth of goods and services in today's dollars, that's if you go by the government's inflation statistics numbers from the CPI, which are largely suppressed. You take that $100 bill in 1918, it bought $1,700 worth of goods in today's dollars in goods and services.
Okay. Do you believe that statement, Frank, that goes back a long way, that for an ounce of gold you could buy a nice suit? So now you have to go out and spend about $1,230 for a suit, and In 2011, it was 1,900, and in 2000, it was 200 if you went to C&R Clothiers.
And Mr. Pinkert, it's actually demonstrably true that that can be done well over the length of time. So just to give you an example, I've read a lot about the housing market. For a lot of American history, the housing market, you could purchase a new single family home for right around 200 ounces of gold. So what I like to do is get out of the habit of always pricing things in dollars and then pricing things in gold. So I look at a brand new house in 1950 in Long Island, New York. I use this example a lot because the first suburb of Long Island was Levittown. So you could purchase a new single family house in Levittown, Long Island in 1950 when, although gold wasn't convertible on demand, it was still linked to the dollar at $40.25 an ounce. When you look at that, when you look at the new price of that house, it was $8,500 in nominal dollars, which at $40.25 an ounce, it was 211 ounces of gold. If you extrapolate that into the future, the same house in 2012 sold for $310,000. Now, if you divide that by the market price of gold at the time, you'd see that the house cost 187 ounces of gold. So you actually got the house cheaper in terms of gold's purchasing power than you did in terms of the dollars. You needed 3,600% more dollars about 70 years later to buy the same house. But when you take it and you value it in a different currency, or a different money, you see that the house didn't change in value whatsoever. And you can do this with a suit, you can do this with houses, you can do this with cars. I've done a division on dozens and dozens of different consumer products and different investments. It actually, when you look at the capital markets and the financial markets and the investment markets, when you want to get an idea of all-time highs, if you just convert the major indices into gold, you'll see that the Dow Jones Industrial Average.
They're not as strong. They're not. You wouldn't get the parabolic look on a chart if you put it in gold terms. In fact, we're not making new all-time highs, are we, Frank?
Not at all. The Dow Jones Industrial Average, in terms of pricing it in gold, which again, I consider gold to be real money with a long-term store value. So it's much more accurate to look at things measured in gold rather than measured in nominal dollars. It topped in 1997. The S&P 500 priced in gold topped in 1960. I'm sorry, did not top in 1962, but we were at 1962 levels. The housing market, where there's been a lot of attention because the housing market continues to hit new all-time highs at all times. Houses are more expensive than they ever been. If you price homes in gold on the Case-Shiller index, you'll see that we're at 1987 levels. And the most interesting one that I saw, which is on a website called pricedingold.com, there's an individual named Sir Charles Vollum who does a lot of this data, and he converts many charts, coffee, cocoa beans, tuition, groceries. He converts all of these indices into gold just to see a different perspective on when things were expensive and when things weren't. If you look at Yale College, room, board, tuition, as everyone knows, college has gone parabolic in its expenses. And if you look at Yale, you convert the cost of room and board and tuition in Yale College. Right now, in terms of gold, Yale College for a year there is the same as it was in the 1930s. Nothing's changed in terms of what it costs in gold.
Okay. All right. Let me ask you this. Do you believe that there's a paper conspiracy to depress the price of metals? A lot of people talk about it, that the market, there's a paper market, and guys like Jim Sinclair, who are big gold proponents, went to Singapore to open up a cash and carry gold exchange so that it wasn't affected by paper and futures contracts.
Well, I mean, I think it's clear that there is manipulation to whatever degree, whether it's legal or illegal, in every market. The gold and silver market, I think it's obvious. You see banks all the time paying fines for it, which really don't amount to very much in terms of money. But the problem with the paper market is you have the price of a scarce, if you want to call it money, if you want to call it a commodity, if you want to call it an element. It's legitimately scarce, and it's being priced in a market where there is no limitation on how much you can produce. So I saw estimates recently that the paper market, sometimes, you can sell 300 forward contracts for every 1 ounce of gold that you have. So if I'm able to sell 300 of the house that I live in, I could really get it pretty cheap, even if I only have one house. I mean, it's the only market I've seen where you can sell something 300 times over and dump, a legitimate amount of paper contracts in the market to get a big change in the price in a very short period of time. But I don't even really look at it as a conspiracy theorist or anything like that. I think it's that people don't want other people to pay attention to gold because they want people to keep thinking that it's a barbarous relic, that central banks the central banks are buying it, the IMF holds it. They're not holding it out of tradition. They're holding it because it is another money. The United States, our reserves are mostly gold. I mean, most people are surprised to know that, but most of our reserves are gold. We print dollars. We don't need to hold dollars in reserve. So most of our reserves are actual gold reserves. And if it's good enough for
plenty, have they decreased over the years? And we used to hold gold for other countries, and Germany started a trend a few years ago requesting it be shipped back there.
There's been a whole bunch of talk of repatriation, and there's a lot of theories out there that we don't hold the gold that we say we do. I operate under the assumption that we still have the gold reserves that we've always had.
Okay.
I haven't seen any evidence to the contrary other than obvious theories, but there's always the calls for auditing Fort Knox and to look for it, to verify it, and I wouldn't be against anyone verifying it, but I think that's a lot of theory and not necessarily a lot of evidence.
Okay. Well, I have to switch gears because it's become so prevalent now, Frank. And,
sure.
Yeah, we didn't talk about this before the interview, but I'm pretty sure you have a view on this. So, the frenzy right now happening in the crypto market, right? So,
yes.
Okay. All right. So, a lot of people are saying, it's better than gold. It's digital gold. It's more portable. It's going to be competition for the dollar. I mean, that this is a whole new wave. Curious on if you think it does provide competition for people that used to be gold bugs, or is it smart to diversify in blockchain in some way in these cryptocurrencies? Are they even currencies, Frank?
This is the big problem. I'm going to make a lot of enemies with my opinions on this. I have strong opinions on cryptocurrencies.
You can still hang out with me, man.
I think cryptocurrency's biggest problem right now is that it doesn't have any unified identity whatsoever. I've heard people say over the last year, since obviously we've seen the bubble start deflating, which is exactly what it was. I've seen people say that it's a store of value. Then it's not a store of value. It's a currency, but no one uses it as a medium of exchange. Then you hear people say that it's gold 2.0. Then you hear people say that it's money. No one really knows what it is because it hasn't been around long enough. The cryptocurrencies, Bitcoin being the main one, obviously, hasn't existed one single business cycle from start to finish. This only started coming around in 2009. There's no way to know what's going to happen with them. I see that there is a lot of promise with respect to the technology, but I mean, the idea of a blockchain, if you go back and do the research, really it came into being in 1991. It's nothing that was invented recently. And with all technologies, and I use this analogy all the time with the Ford Model T, you might have the first mover advantage like Bitcoin does, but with all technologies, somebody smarter, somebody better will develop something that is better than the previous one, which is why we don't drive Ford Model Ts around anymore. So to say that they're going to take over as a currency, to say that they're going to take over and crowd out the interest in gold, I don't see it happening. I don't believe that they're currency. I think that, from my perspective, is that it is a speculative mania on new technology. And that's where you get these parabolic moves up and you get the parabolic moves down. And, they're not regulated. There's a lot of price manipulation in the markets, like, in all markets. But a lot of the people I talk to involved in cryptocurrencies have no interest in gold whatsoever. But if you look, every time a cryptocurrency is displayed for advertisement, what is the first thing that they do? Is they put a big B on a gold coin.
Yeah, that's interesting, Frank. They're trying to sell it as a security.
And they call people that develop
it's subliminal, because I never thought about it. I go, yeah, it could be a Krugerrand.
Yeah, well, why do they call them miners? They're not mining anything. They're computers solving long, complicated math problems, math equations.
Yeah, you know, Frank, I was going to try some Bitcoin mining. I went out, I got a shovel and I got a pick, and I came to my laptop and destroyed it.
I think I mean
maybe it's like the gold rush. You know, it's not owning the coins; it's you know, selling the picks and shovels.
That's true, and those are probably the people that will end up making the most money. But like we were saying from the beginning, in terms of comparing it to fiat, you know, Bitcoin, you know, there's supposed to be a fixed supply at, I think, 21,900,000 Bitcoin, which is fine. So you know, made it artificially scarce. But Bitcoin, all it is electrons, and there is no limit to the infinite number of cryptocurrencies that can be developed, and there's no limit to how many better cryptocurrencies can be developed. So in the respect of Bitcoin might be scarce, depending if you want to look at it mathematically. It's not actually scarce. It's not anything. See, gold will always be gold. Bitcoin is only good for Bitcoin. You know, gold has intrinsic value. Bitcoin has market value. Bitcoin doesn't have any intrinsic value. There's a difference between values. Bitcoin's current market value is over $6,000, but Beanie Babies in the 1990s
so you're talking about cost of production.
Right, and there's different varying costs of productions all over the world. The problem is that these things are unlimited, and as time goes on and computing becomes more advanced, there's no limit to what people can do to develop these things and to make infinitely better ones than exist now. You know, what most people are ignoring is that what the private sector develops, the government usually co-ops and uses it for itself. So if you get people confident into using digital cryptographic currencies, there's no stopping any sovereign government from doing the same thing and making that the coin of the realm. And,
how about you know, moving towards cashless? A lot of gold people believe that that's where, you know, governments want to go. They want to do something like Modi did in India to you know, be able to. They'll justify it. They're stopping crime and the, you know, black market by doing that. But then, even though I think they already know everything we buy and sell, they really would. There'd be no, you know, cash economy.
We already, I think, like probably 95% digital at this point as it is. I mean, I don't see very many people carrying cash around at all. It's mostly debit cards. You have Apple Pay, PayPal. You know, people using things. It's already very digital. But
Orwellian, and we don't even know it.
And the problem is, it's just think about the natural disasters that we have. All of these types of digital payment systems are all predicated on the electrical grid. I mean, if you remember Hurricane Sandy, look at Hurricane Michael, Hurricane Maria. I mean, these things happen with regularity. If you need to get supplies, you know, I live in the Northeast, and during Hurricane Sandy, if you didn't have physical cash, you couldn't get gasoline, you couldn't get milk, you couldn't get water, and you didn't have electricity for sometimes 3 or 4 weeks. So I don't know how you can move to a completely digital system without guaranteeing complete, you know, unfettered access to electricity at all times. I don't think the technology is there for it. I think you can move toward a lot of digital payments, which are convenient, but I think you need a cash alternative, especially during natural disasters and so on.
Yeah. You know, that's a pearl. Everyone should have, you know, maybe a 2-3 months of cash for living in emergency situations.
You know, it's digital's great until you don't have electricity. Cryptocurrencies, it's another thing I talk about with a lot of the crypto investors is, you know, there's something called counterparty risk in all investments, and a dollar is a promise to pay, which means a dollar is only worth something if someone's willing to take it. Cryptocurrency is the same way. It has counterparty risk. You need electricity. You need access to the internet. You need someone willing to exchange for it. It's not in and of itself a counterparty-less asset.
Okay. Why don't we wrap it with, you know, a lot of poor man's gold, you know, silver, and the gold-silver ratio is really near historic measurements right now. I don't know if you have a view on that, but the gold-silver ratio, I think, is near all-time highs. It takes a lot of silver to buy an ounce of gold right now.
Yeah, I listen to a podcast often. It's David McElvaney. He runs an ICA in Colorado. He does a weekly podcast, and he actually talks a lot about never even needing to transact in dollars with respect to gold and silver. Is that he just waits for the ratio to be something like absurd, where you can get tons of silver just by trading gold for it, and then you could literally double or triple or quadruple your investments without ever having to use dollars in transactions. It's just when that balance gets out of whack, you can trade 1 ounce of gold for whatever 80 ounces of silver. Sometimes that ratio gets back down to 20 to 1 or 20, 40 to 1, and then you can trade back out of it. And I don't personally do that, but I think
how about as a store of value though compared to gold?
Silver as a store of value is, to me, I think silver is actually more scarce, if you want the opinion from me, because at such a low price, it doesn't pay anyone to recycle. Yeah, or to recycle it out of electronics. Silver has thousands of industrial uses, so a lot of its mining is to be used by industry. It gets consumed. Gold doesn't get consumed. Gold gets stored because everyone 5,000 years knows gold is money, is wearable wealth, as jewelry. Gold doesn't have that many other uses other than money. Silver does. Silver, at its price, is not worth recycling it. So as industry consumes it, it goes into every cell phone, it goes into every computer, it goes into every phone, it goes into every monitor. Anything with electrical components uses silver. So when those things are thrown away, the price is not worth going in to recycle it. So silver gets used. And
even at $13, because I know people used to do it at 5 and 8 and 10, and it's not like silver is as cheap as it used to be, but it's not worth it, huh?
And that from what I've read, people don't recycle it. Like I've seen, people will recycle gold out of certain computer components because gold is an exceptional conductor of electricity. But again, the industry doesn't use much of it because it's too expensive compared to using silver.
I could, maybe you could write another article, and I'll include my vault address for people that aren't interested in recycling it. And they could just ship it to me. But anyway, Frank, what an enlightening conversation. If I had to encapsulate it is, price everything in gold compared to years ago to see what type of buying power you have, right?
It takes an extra 30 seconds to just look and see what a different perspective is, because when you get caught up in an illusion of nominal dollars, I mean, if you look at other countries that have had fiat currencies explode. I own currency from Zimbabwe, and I like to show people that I'm a trillionaire. But the problem is that you could be a trillionaire and not be able to buy a loaf of bread. It doesn't mean anything nominally. You have to look at things in terms of its purchasing power. So if you use a different currency and you price things in a different currency, you can see whether or not your purchasing power is declining or if your purchasing power is staying steady. So when you, again, like stocks, financial assets, if we have inflation, which, people are very confused about what inflation is anyway, but inflation is the expansion of the money supply, which we have all the time. The price increases that people usually refer to as inflation
are nominal.
Right. And they're just the result of more dollars chasing the same limited amounts of goods and services that we want. So naturally,
assets. And because I've seen the stock market rally 30% and the dollar come down 30%. So really it was all nominal gains.
And then when you can inflation adjust it for the government's numbers, or you can inflation adjust it for what you think inflation actually is. And then you have to remember, you got to take out, capital gains taxes. And I think people look at nominal dollar gains as if it's the only measure that they need to look at when it comes to their investments or the assets that they own. And I just like to do a 30-second calculation and say, has the things that I own actually increased in value, or have they increased in dollar value?
Yeah, that's great, man. I really appreciate you taking time to edify our community.
I appreciate it.
you know, because it's something that people don't hear, and we get caught up in, you know, what's our P&Ls and how much nominally we're going to book this quarter, and it really does put everything into perspective. Anything that stands the test of time, you can trust.
A lot of the bad feelings going on out there, and a lot of the misguided anger, and you know, you hear wealth inequality and stuff. I mean, it'll all be summed up like this: your grandfather was able to provide a better quality of life for his family on $6,000 a year in the 1950s than people are today, making $60,000 a year. And you might make 10 times more than your grandparents made, but you're not providing the same quality of life that they did. That's the real sad reality that we're living in.
I can attest to that.
Well, it was very nice meeting talking to you.
Yeah, it was great, Frank. Let's keep in touch, buddy. Really interesting talk today. So everyone, Frank Jers, you could follow him at Occupy Wisdom. He's got a book. I believe it's an ebook that people could pick up. Let's see. I think I have it here. Yeah, Why We're Poor by Frank Jers. So you could pick it up. It's on Kindle. And thank you again, Frank.
Thank you, sir.
And you know, let me end it with this. Don't wait to buy gold. Buy gold and wait.
It's nice talking to you.
I got a million of them. All right,
I like
buddy.
that. All righty.
All right, everyone. Have a great day. We'll wrap it up TGIF tomorrow. I'm going to have Peter Goldstein with us. Good hunting the rest of the day. And remember, most of all, whether it's gold, whether it's fiat, don't just count your pips, count your blessings. Adios, everyone. You're welcome. Thank you. You're welcome, Tom.